All right, it is Wednesday, March 17th. Happy St. Patrick's Day. Before I forget, to all of you who may be Irish or who may want to be Irish, I am more English and German than anything, so and this is about the best I can do for a green wardrobe. So anyway, hope your trading week is going well. I thought I would do a video tonight. We haven't done one in a while. Just maybe reinforce some of the recent posts. Been keeping things fairly short and sweet this week. We're still involved in the 2010 Jelly Trading effort, which wraps up day after tomorrow, which consumes all of our days and some of our evenings. Anyway, first of all, thanks to all of you for the kind birthday wishes last week. I appreciate that. And I actually got quite a bit of email on both that and the last weekend post, which I'll touch on in a second. On Monday, the Money Show interview started rolling out, and of course yesterday's post, I posted the 4 direct links. To the extent that you find them helpful, great. They're brief snippets, 4 or 5 minutes apiece. Talked about poker, talked about ideal setups, trading as a career, commissions. So if you find that helpful, great. My thanks, of course, again to the Merck and MF Global, New York Expo folks, and Tim Borkwin and his team that does all of the production work and the studio work. So my thanks again to Tim and his group. Following up a little bit, I guess, on the weekend post, the Trading Buddy update. I got a little bit into group trading dynamics, which I think is just incredible, and we could probably talk about that for hours. You know, suffice it to say that I'm still, you know, working through trading on a one-on-one basis with another trader, which is just going, you know, fabulously. It's exceeding my expectations. It's something that we both plan on continuing, making some major strides, and those numbers that I provided in terms of ratios over the weekend have even gone up further. So, you know, that's going real well. You know, in terms of group dynamics, my long-term view on this, and it's pretty deeply held, is that it's, you know, it's more harmful than helpful. So if you do it, whether it's, you know, a 2-person trading team or whether you do it in a larger group, I think you've got to structure it in a way where you've got to be real careful to dodge the landmines. All of the disadvantages, especially the psychological disadvantages of group trading, mainly in terms of self-sufficiency, in terms of conviction, in terms of aggression, and in terms of ego that tends to creep into those things. You know, if you come across people that want to talk about trading and you know, and be right more than, you know, actually trade profitably, then you can run into some issues in terms of group dynamics. And I've seen that, you know, throughout the dozen years or so that I've been doing this. So it's been interesting for us in our various efforts, both the ongoing Jelly Room, the networking room, as well as with this one-on-one effort, that we're just working real hard at trying to avoid, you know, situations where, you know, you might even subconsciously get, you know, fall into some of these traps that's associated with group trading. When you're at the poker table, no one's sitting over your shoulder telling you what to do. There's a reason for that. Same thing with golf. This is a game of self-confidence, of self-sufficiency. That's why I believe in teaching that way, and don't run the chat rooms ongoing, that kind of thing. But the group experiments have been very, very interesting, especially the one that I'm working through right now, which, as I said last Saturday, is no longer an experiment. And I really look forward to continuing that. So just a quick update on that. Again, I think that there are, again, pluses and minuses in terms of group dynamics. Just be real careful if you do this sort of thing to make sure you're doing it for the right reasons, and craft it in such a way where you're keeping ego out of it. You're keeping, you know, the reliance on another individual. That is the worst. You know, when even subconsciously, if you start, you know, thinking that you need someone else to tell you what to do or to make you feel good before you get in a trade, it's all in the charts. It's all in the charts. So you know, you got to be aggressive, you got to be assertive, you got to be self-sufficient, and you know, to the extent that there are advantages of the efforts in terms of multiple sets of eyes, in terms of camaraderie, in terms of mutual support, then all great. But I think it's something you got to do real carefully. I want to go back real quickly to the March 8th. Dissertation I did a little bit, for lack of a better word, in terms of simplicity. You know, I'm going to go to my grave, and probably on my gravestone. Well, there'll be a lot of things on my gravestone if I have anything to say about it, and mostly it'll be about the things that I don't do well. But you know, it'll be written on there, KISS. You know, keep it simple, stupid. Because I just, you know, continue to see and see pockets of this industry, I guess, where you know, they come up with fancy names for patterns and this and that and all that kind of thing, and you know, you see these charts with 1,000 different lines and indicators and all that, and I mean, I can't help but laugh, because to me this business is so much about simplicity. With all due humility, we in the jelly effort, this current effort, have pretty much nailed every single open, and we're now in our 18th day. Okay. And the reason for that is not because of anything wonderful that we're doing or that we've invented or anything. The reason is that slide that I put up on March 8th in the March 8th post, which is the one that says everything I needed to learn about market rhythms I learned in kindergarten. It's amazing sometimes in our life we have to step back and become basically dumber in order to move forward. And I talked a little bit about the deprogramming in that presentation. But this is really what it's about in my view. Trading is simple. Trading is simple. It's not easy, but it's simple. Okay, simple in terms of, again, the whole, you consolidate, you break, you trend, you extend, you back and fill, you consolidate, and it just repeats the whole process again. Again, I refer you back to the March 8 video on that. But I saw it again this week. I see it with people, coming up with fancy names and fancy terms and fancy technical indicators. And I've said this before. Give me a Sony Vaio, give me an 11-inch screen, 2 charts, and an order entry system, and I guarantee you I'll make money by the end of the day. Okay, that's what this business is about. It's not that difficult. It's not that difficult to read a market the next morning based on how the market closed the day before. It's not difficult at all. 18 out of 18 is not luck. And so, I just want to reinforce that a little bit because it drives me crazy. It just kills me. Let's see, what else? Not really much else to say. Again, I hope to continue to share my journey in terms of the size. The block size movement that I'm doing, which will get back into full force on Monday. I'm gonna talk a little bit more about that. I'm not talking about my trading a whole lot right now, as I kind of hinted over the weekend, because it's going as well as it has ever in my career, and I just don't want to talk about it. That's just the way it is. I enjoy talking about the heartaches more because I think it instills a level of humility, and that's the only way that you're going to keep it up. So. All the work that we've done in the past with the fictitious drawdown and always coming to work the next day thinking that you got, slaughtered by the market, kind of back in that mindset. And there's a good flow despite oh, by the way, geez, we've had a tremendous reduction of volatility, right? And if you think traders can't make money in less volatile markets, you're dead wrong. You got to adapt to the conditions. That's why with their jellies. That's why we talk about, needing to adapt to the market current. You do some size adjusting and try to get used to the rhythm and feed off of the environment that you're given, and there's no reason that you can't do as well now as you did back in the more volatile years. So again, that's what we have to do as traders and adapt. That's all I have for tonight. Going to run. Hope you continue to find the blog helpful. Up to over 500 Twitter users. Again, hope that directs you towards some decent information. Have a great night, and we'll do another one of these probably over the weekend. Take care.